you see the silver price not rising every single day, but suddenly trending upwards by about 15 odd percent in a week. And that indicates that the squeeze which we talked about is to some extent happening. It's not a major squeeze, it's a little squeeze which is happening. Longs are capitulating very quickly. Obviously, the fact that we had this huge drop just after the end of January is worrying them that it might happen again. But on the other hand, we've got some shorts wondering if it's going to shoot up to all-time records the next day or two. Also closing. So both sides are closing. We probably will have a fairly orderly settlement. May open interest is rising rapidly. So we can see that a lot of people have rolled their contracts into May. They've sold March and bought May.
Silver prices have jumped nearly 15% in a single week, signaling the early stages of a potential short squeeze. According to market analyst Clive Thompson, this upward trend reflects both long and short traders rapidly closing positions. After January's sharp decline, many investors remain cautious, yet rising open interest in May futures suggests strong repositioning. Traders are rolling contracts from March into May, anticipating continued volatility. While this appears to be a moderate squeeze rather than a historic breakout, balanced liquidation on both sides could lead to an orderly settlement if momentum stabilizes. Now, we present the clips from Clive Thompson's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
What's caused the fall in open interest has been the rise in the silver price. Perhaps it wasn't as dramatic as we hoped if you're long silver, but it's still 13% in a week is not bad. But as the silver price has risen, the longs have decided to close their contracts. Not all of them, but some of them have. And at the same time, some of the shorts worrying about a squeeze have also caved in and closed their contracts. So let's have a look at the hard numbers just to see where we are and explain the situation. So we'll start by looking at the eligible silver. That's silver which is in the right form, but it's not got a warrant attached to it. It's not ready for delivery into the futures contract. So generally this is silver which might be owned by hedge funds, by ETFs, by sovereign wealth funds, by family offices, mostly people who are not intending to sell it, but of course at a certain price they might well sell it into the Comex market, and that would mean moving it from the eligible category to the registered category. So the registered category which we have here is the silver which has got warrants attached to it, which is capable of having the warrant change hands on the 27th, well, actually on the 2nd of March, but the notice would be given on the 27th of February, and the silver would change hands on the 2nd of March. So that's silver in the right form, in the right place, ready to be sold as to meet the March contracts or future contracts as well. Open interest, you can see it's coming down very sharply from last Wednesday. It was 268, then 239 million, then 222 million, then 188 million. And the latest figure, which is as of yesterday, this is the close of business yesterday, the open interest was 114 million ounces, equivalent to 114 million ounces. Probably with the direction of travel today will be much lower, 25th. And then, of course, 26th is that's Thursday this week. So we don't know the figure today, Wednesday. We won't know the figure for Thursday until Friday. But 26th is the day when, if you are long, you need to be out of the contract if you do not intend to take delivery of the silver.
Silver markets are experiencing heightened volatility as rising prices trigger a sharp drop in open interest. A 13% weekly surge has prompted both long and short traders to close positions, reducing overall contract exposure. On the Comex, eligible silver metal meeting contract standards but without delivery warrants remains distinct from registered silver, which is warrant-backed and ready for settlement. As open interest falls from 268 million ounces to 114 million ounces, market participants are closely watching delivery deadlines. With first notice day approaching, traders unwilling to take physical delivery are rapidly exiting, reshaping short-term silver price dynamics. Let's get back to the interview.
So anyone who by the close of business on the 26th of February is still long the futures contract, the March contract, is basically signaling to the market that they have the cash and they have the infrastructure and are ready and able and willing to take delivery of the silver. They don't know when it's going to come, but in all probability, the vast majority of shorts will decide to deliver the warrant or give notice on the 26th. They'll give notice on the 27th, and that means the vast majority of that silver will change hands on the 2nd of March. There will, of course, be some shorts in the silver market who haven't got the silver yet, and they'll be perhaps hanging on, hoping that they'll get a better price on silver further down the month. And there'll be some longs who don't really intend to take delivery of the silver, but who are just hoping to squeeze the shorts as well. So there'll be an ongoing battle for the next few days, and as we go into March, right through to the end of March probably. Looking at the registered silver, and the eligible silver, we're continuing to see a drain on silver from the CME warehouses. That's going on. We've got very little silver, in fact no silver at all, coming into Comex. One of the reasons is the problems with transportation in Mexico. It's become very dangerous to transport silver bars, so some of the silver miners are now transporting the ore, the dirt, to refineries elsewhere, which obviously the dirt is less attractive to steel because the cartels don't have silver smelting facilities, so they're not going to steal it. Of course, there are some dangers there too, but they're not shipping the silver bars directly to CME warehouses at the moment because of the transportation and the risk of theft. So that's slowing down the process. Nothing's coming in yet. It might come in when the thing sorts itself out, hopefully in a few days, if not before. But yeah, we're seeing the eligible silver and the registered silver go downwards. Probably the open interest will be about equal to the registered silver when we get to the 26th or the 27th of February. So I'm not expecting any fireworks. The silver price, hard to say what it will do. It depends on who chickens out first, whether it's the shorts or longs. But as things stand, we have open interest for 114 million ounces, but only 87 million ounces available to be delivered. But that 114 million ounces looks like it will go down to 87 million or below as we speak. On the right-hand side, you see the silver price, not rising every single day, but suddenly trending upwards by about 15% in a week. And that indicates that the squeeze which we talked about is to some extent happening. It's not a major squeeze, it's a little squeeze which is happening. A lot of longs are capitulating very quickly. Obviously, the fact that we had this huge drop just after the end of January is worrying them that it might happen again. But on the other hand, we've got some shorts wondering if it's going to shoot up to all-time records the next day or two. And they're also closing. So both sides are closing. We probably will have a fairly orderly settlement. May open interest is rising rapidly. So we can see that a lot of people have rolled their contracts into May. They've sold March and bought May.
Silver futures are approaching a critical delivery window on the Comex as traders decide whether to take physical metal or exit positions. By February 26, any investor still long the March contract signals readiness to accept delivery, with warrants expected to transfer in early March. Open interest has dropped to 114 million ounces, nearing the 87 million ounces of registered silver available. Meanwhile, warehouse inventories continue declining amid transportation risks in Mexico. A modest 15% price surge suggests a mild short squeeze, while many traders roll positions forward, boosting May open interest and stabilizing settlement expectations. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.